if your stop losses are getting hit. Maybe your strategy or your setup is the problem and not you. Welcome everybody to brand new video. In this low wicks environment, you're gonna learn low wicks terminator. Before we start, I have to give you standard disclaimer that strategy explained is only for educational purpose to be used by his or her own risk. Stock market always contains risk to capital. There is no holy grail strategy which exists in the market. Now let's talk about how do we trade low wicks. But before I tell you the strategy, I want to address this elephant in the room, which is called what is the number one issue when you trade low wicks. I understand your pain. In fact, I want to show you. VIX currently is trading around 10.12. It is really low. But market is going gap up and gap down and all kind of action happening in the market. Now, even the worst point is, suppose if you do conventional strategy, for example, if you do iron fly anyway is gonna give you a super tiny range. But if you go for, suppose, let's say a short straddle, right? Market currently it's 25,205, wherein your upper break even of the monthly series is 25,586. The lower break even is 24,814. That means the range which you're not getting for short straddle. In fact, if you sell any kind of a credit strategy at this point in time, there is hardly any range. This is a big issue when you trade low wicks. And as the popular saying goes, that in high wicks environment, relatively option selling becomes much easier because there is a lot of premium. But the real test of a trader is in the low wick situation, and low wicks can last for months and months. You can check it, it can last for 6 months as well. That means what? That means probably 6 months of stop loss hunting if you keep trading the same conventional way. Here I've brought you steps to build the low wicks terminator for you. This is for people who love to take screenshot, who like to deep study with me. So there are 3 steps how to create this terminator, and obviously I'm going to teach you how to create the strategy. Then I'm going to tell you how it's supposed to work, what are the weakness of the strategy, and obviously I'm going to tell you towards the end of the video VIP points and how to adjust it. So number 1, we're going to start with shorting at the money put, which is the monthly series, and after that the point number 2 is we're going to long next month in the money put. So short and then long, and point number 3 is sell far out of the money put is what we're going to do in the current series. Now this is the theory part, and theory class is over everybody. Now let's talk about action. I'm going to simulate this and we're going to go more deeper. So here we are on an option simulator. Watch it carefully. We're going to build the strategy from scratch. We have taken the monthly series, obviously. What was the step number 1? The step number 1 was to short around at the money put option. So market currently is 25,200. We can go slightly down and we can sell the round figure, which is 25,000. You can sell 25,100 as well, right? Step number 1 is done. We are selling it in the current series. After that, what do? We go to the next series, which is October, and we see, remember, the VIX is low, which is our main number 1 challenge, which we have to overcome. Now we have to go in the money. This is out of the money for puts. This is in the money for puts. And what do is we look to buy a put which is in the money. I've taken the round figure because the liquidity is a lot better. And in Nifty, of course, liquidity can be there. And after this, what do is that we again go to September, which is our main real series, and we open this chain, which is here now. Let me do that for you. And here we again go to September. And now what do is we go out of the money, right? So we went slightly ATM, in the money, out of the money, different combinations, different results, obviously. And when we do this, and remember, we are just selling one lot of each leg. Okay, the work is happening only on the put side, not on the call side. The reason, the main technique, I'm going to tell you later. Now here, when you do something like this and you close your option chain, this is how the payoff looks at the moment, right? Now, as you can see, 2 legs. The first and the third is of the September. In the middle, we have long because we have to provide the cover. If I buy October series at the money will have really high theta, and I'm buying something. So it does not make much of a sense to really have the theta bleeding out for me. That's the reason we went in the money, and it's a good and smart combination to have this kind of a setup when we trade for low wicks. To make something like this, it's gonna take you some margin. I recommend you to cross check it with your broker, how much is the margin, because when we have multiple legs in a particular strategy, margin varies. Also, we are doing this strategy with the current pricing when the half of the month is already over. When we do this a strategy like this, when there is a lot of premium and it's the start of the month, obviously the break evens are a lot more wider. So there is a lot of breathing space when we have something like this. Now what we're going to do is we're going to run a simulation on this in both the situations. And how does it work? We don't have to go so far. We can just take example of July. VIX is been trading around 10-12 level. So let's test July and let's see how this perform. Also, when it start to go completely against us, what's the plan to tackle this? Here we are on a simulator and we have loaded July. VIX was around 12, etc. Okay, why this is specifically for low VIX and why are we doing it on the put side? It's a very important question, and we're gonna have an answer to this as I proceed with this. We are shorting around at the money, maybe 1-2 strike, slightly out of the money, and we are selling this put. This is our step number 1. Once we sell this, we have to buy the put, but we don't have to buy the current put. We have to buy the next month put. Now, what do? We went to next month, which is obviously August, and we go to option chain now. And what do? We are here. We have to go in the money and we long this. After that, we have to again go to the current series, go out of the money, and we sell a put option. Okay, so let's do that. So here we are, and we just simply go to our current series. How easy is this? Option trading is a very delicate balance between the strike selection, the market environment, is the market trending, what is the condition of the market, and based on that we can deploy our strategy. And what do? We go out of the money and we sold it. Quite simple, the same quantity, and I'm not making it too advanced. I'm making it simple so that it's easy for you to grab. Now let's see how the payoff looks. The payoff looks something like this, right? As you can see, same chart, one interior hedge, completely different day-to-day behavior as we move ahead. Okay, now let's see what happens with this. VIX is low already, and if we go ahead, because ultimately we are playing a delicate balance of how the VIX behaves, how the decay is. The decay is anyways very less. As we move ahead, we came to July, and July the 7th we have come, and what do we see is that we start to do quite good with this, and you can move along, you can play along with the strike, because there are two different series involved. So option is behaving differently, and as you can see, sometimes the payoff becomes like this, which is completely okay, and we are going ahead slowly. And as you can see in this simulation, it is showing that we are making approximately 4.5. This is a simulator, this is not a recommendation. Like I told you, low VIX strikes behave differently. The market from here has really come down over here, and payoff has also changed. Remember, in the low VIX is probably one of the most difficult and the most challenging situation in the market. Now, I know what you must be thinking. You must be thinking that if we take the trade and the trades start to go bullish on us, how do we expect to play in this, right? So here, when we create the strategy, this looks something like this, right? And then later on, with passing days, the wings go wider and wings go slower. And exactly that is what we're going to cover in the VIP points now, which I have for you. Always remember, guessing ends when your plan has this level of detail. And if you are somebody who's been trading the markets from quite some time, the form which is on the pinned comment is your starting point. In options trading, like you're learning right now, learning and getting better things into the market, getting better at your trading is required in the markets. Now let's talk about VIP points which I have for you. So VIP point number 1 is the logic of put side IV. Now a lot of beginners usually try to do it both sides, call as well as put side. Let me tell you, that can be dangerous. The put side IV is generally more than the call side IV. The VIX is already low. It's around 10-11. There is no range in the market, as you know it, hardly very tiny range in the market. And if you start to do it call side, that is not something really smart. I have to tell you the strong points and the weak points. This is not one of those channels where I'm only going to talk about positives. I have to show you both sides of the coin, and I'll let you decide. If you're trading low wicks, then why are you doing it on the put side? Number two, adjustment on the bull side. I'm sure you would like to know this. Let's talk about this. Like, this is a starting point if we are creating the strategy, and obviously, as you know, if market starts to go down, then we have a nice big hump here. And what do we see is that the max profit is also visible, and it's half of the month is already gone into this. The problem may start when markets start to go up. The VIX is already very low. It's 10 point something at the moment. If market starts to go up, we have sold an out of the money around at the money put and at the money put which is far. On purpose, we have sold these two puts of the current month. Why? The reason is very simple. Number one, the current month has more theta. And number two, if markets start to go against us, we expect the premium of 115 to go down, right? Because we have sold the put. Wherein the put which we bought is slightly in the money. So the decay point, it's gonna be less. Now, you've been trading the markets from quite some time, and there is a big difference between activity and progress, right? If you keep doing the same thing over and over. Now, here, if markets start to go above, first of all, we have the range, we have the breathing space, and this is a calendar strategy which we are taking here. If market starts to go up, these puts, especially 24,750, as soon as this put becomes around 60% of its premium at the time we enter, we look to move this put to 25,000. So as soon as we move this, obviously moving the put, you take a certain amount of credit. So your break even ultimately, you expect it to be slightly more high. The VIX is already 10.5. So moving the put towards their market is going something like this. One can definitely consider, and also there are only 2 weeks for the expiry. This is not a trade recommendation. This is just a teaching style. How should you approach the market from all different angles and make sure that everything is aligned and gunning in your favor when you trade different market environments. And you come on this channel because you want to get ideas on how to make your trades better, your option trades. The ideas probably which work in high VIX not necessarily will be of use when you're trading low VIX. Low VIX is a different mindset altogether. Why theta play is more risky in low VIX, like I suggested as well. It's not like one stone kill all birds in all market, all time, every time. A smart trader must have the strategies, the techniques of different market environments. And then the best part is the art is to pick which strategy one should function when. Why are we doing on the put side, like I told you, how to do if market go completely against you, how to do if market goes into your favor. The VIX is low for a reason. So theta decay play is usually for high VIX. You get the range, you get the theta. But when the VIX is really low, then the theta decay is also less. This is something which you must keep a note of. There's no need to get stuck in the loop and keep doing the same thing over and over again. You can always elevate your trading game. How do we tackle option trading from all different angles and pick the right strategy on the right time? Thanks for watching, everybody, and I wish you all the very best. Take care.